Welcome back. And shifting focus to the paint space, which has been a subject of intense conversation over the last few months. Now, in an exclusive interaction with Shireen Bhan in Davos, JSW Group's Parth Jindal told CNBC TV18 that they are keen on buying Akzo Nobel's India paints business and that they have put in a bid. Listen to what he said.
With JSW first and then Birla's entering, I think the industry has definitely heated up, and it's led to the first bout of consolidation with Akzo Nobel putting its India assets on the block. My true belief is that the paint industry is not a winner-take-all market. It's not a capacity-driven market. You can't just build plants and expect the consumer to choose your paint. I think there's a lot of brand equity that has been created over the years by the incumbents. And this is an industry where you need to win the micro battles. You need to win over the influencers, whether it's the contractors, the painters, the interior designers, the architects, and finally the end consumer needs to select your paint. So it's been an interesting journey. It's completely B2C, and it's the first time JSW Group had gone into B2C. Now with automobiles, it's the second one. But it's exciting, and I think the Akzo Nobel opportunity is a really exciting one.
All right, so what Parth Jindal's comments have done is set the cat among the pigeons once again in the paint sector, which has actually been quite, it's been in a bit of a flutter ever since the Birlas announced their entry, their capex, and the way they're growing, the derating that we've seen in the names like Asian Paints, the biggies of the industry, and everyone and their neighbors having said that, okay, they might be looking at Akzo Nobel as an asset the minute it was announced to be on the block itself. So, perfect to get in an expert view on the sector right now, where things stand and what should investors do from here on as well. Manoj Menon, who's the head of research and consumer analyst at ICICI Securities, joins in now. He tracks the paint space very closely. Manoj, let's get this straight then. What are your views on this sector right now? This asset itself, who do you think is the best place to buy it? And is it at fair value right now?
Yeah, thanks, team, for having me today. So there are three aspects to the paints, industry and the stocks at this point in time. Post a significant recovery in demand, what we have seen in paints post-COVID, it seems that the general industry slowdown, consumption slowdown, seems to have caught up with the paint sector also, which is what we saw in the September quarter across the board. And the forecast for December is, that it's not really getting better despite the festive season, etc. Right. So that's point number one. There is an industry deceleration. Point number two, on the ground, to the channel checks, which we see with a fair amount of regularity, we are definitely finding that the competitive activity, which translates into higher competitive intensity, let's say when it comes to, let's say, trade discounts, consumer discounts, etc., has also kind of increased, let's say, over the last 6 months, thanks to new players and also probably the existing players wanting to save their turf, right, protect their turf rather. Point number three is the potential M&A opportunities for many of the players, and we remember actually writing a thematic about a year back on potential consolidation industry, even though we didn't expect let's say the current situation of Akzo Nobel exiting India as a base case at that point in time. So at this point in time, look, when you look at the Akzo NV having decided to exit the decorative business in India and part of the industrial business also, except that they probably want to keep the powder coating, for the longer term, which is a small, portion of the India enterprise value. Look, I think it's a great asset for, honestly, all the incumbents, except probably an Asian Paints. It does make eminent sense for them to bid for the Akzo asset.
Manoj, good afternoon. Thank you for joining in. With all this chatter going around the Akzo Nobel asset, which incumbent or company do you think is best placed to acquire this asset?
Okay, so let's take one name at a time. Let's see if we take Berger Paints. Dulux is actually a great fit for Berger. Given the fact that Dulux paint brand is over-indexed in urban, and competes quite effectively with Asian Paints, so that aspect actually is very much there. Second, is that for a Berger which has got over-indexation in the eastern part of India, again it actually makes sense from a geographic point of view and even from a product portfolio point of view. You take, for example, in Indigo Paints, right? Indigo has got about 20 or 15 to 20% or maybe slightly higher revenue coming from Kerala, which actually is a market which a premium brand like Dulux could actually do far better than what they're doing today. Again, there is a great fit. And Pan India, the Indigo as a brand, which is positioned as probably mid plus or mid minus slightly, whereas Dulux is clearly premium. So again, a great fit. and also the non-Dulux part, which an Axo brings to the table for an Indigo Paints, which is currently the process of building. You look at a JSW, which had a fair amount of presence in the southern part of India. Again, a geographical presence which a Dulux brings to the table. Apart from the fact that Dulux being kind of very sharply positioned as premium, right? I think in which they are the number 2 after Asian Paints Royal. It's a clear winning proposition for any of these suitors, actually. So difficult for me to actually pinpoint, one of the place. It's actually makes sense for almost everyone except Asian, which doesn't really have any white space.
All right, but in that case, the question is price, because if there are so many players vying for this asset itself, chances are that there may be a bit of a bidding war. So at what price is it good for whom? Because from a JSW Paint standpoint, immediately investors won't get affected because, it's not going out of any of the listed JSW companies. But players like Indigo, players like Berger, players like, Kansai Nerolac, if at all they're looking at it, or even an outside chance, something like a Pidilite, when they're looking at it, given the sort of money that they will be paying for it, do you think it will be accretive for shareholders if the companies go ahead and pay top dollar? What, according to you, would make most sense?
So let me address this in 2 parts, without getting into numbers, specific, etc. If you look at AkzoNobel India, a stock we cover, right? So we have an ad rating and a fair value, which is about 20% higher than, let's say the current price. So that's our fundamental view to begin with. That's our published view, right? So that's a sense on what we think has a fair value, irrespective of the M&A. Now, the second way to think about this is that, the current around $2 billion market cap, which AkzoNobel India trades at. If you look at AkzoNobel NV, the parent company, which is approximately around 10 odd billion euros, market cap and a few $1 billion of debt. The fact of the matter is that, let's say anything materially higher than, let's say the current market cap, given the fact that India contributes about 4% to the parent company revenue, 20%, of the market cap, etc. I think there is a cap that, given the contribution of AkzoNobel India to the parent company, or put it the other way around. If you look at the other paint companies, particularly in the last 6 months, which is all corrected significantly, I think these interlinkages will actually decide the incremental fair value, which, let's say, the strategic value, etc., the suitors may want to pay.
All right, that makes sense. Just a final question, and this one's not from the paint space. You also have views on other consumer stocks. In particular, Kalyan Jewellers is something that I want to ask you about, because you've been fairly positive. Fundamentally, nothing has changed. The company reported a strong, third quarter update as well. But the kind of price damage that we've seen on the stock reeks of things beyond fundamentals. Could you give us a sense of, if you're in the know of, what possibly explains this rapid decline in the stock price? Because now it seems to be, getting into that spiral of promoters increasing their pledge, the stock falling further, then promoters to manage that, perhaps pledging some more of its stock. What's exactly happening here?
Mangalam, thanks for asking that question. Look, in Kalyan Jewellers, Titan are the 2 jewelry companies which we cover fundamentally. Titan, we have a hold rating. Kalyan, we have an ad rating. That's the last published view. So no change to the rating, no change to the estimates, until it is published next time. Look, I think the fact of the matter is the jewelry industry has been having a very good tailwind of industry formalization. And Kalyan, in the last few years has definitely executed better than the peer group. There are a few other listed peers also, right? So I don't think that has really changed in the last month or so. So our fundamental optimistic view on Kalyan absolutely remains. Based on our observations and interactions with investors over the last 2-3 weeks, it appears that most of the chatter, most of the, let's say, news flow, etc., seems to be on the technical phase. As it stands today, we will go by what the company came out in your channel 2 or 3 weeks back, and also an investor call subsequently. Ramesh Kalyanaraman and the team, presented a lot of things from their side of the story on a lot of the chatter which is going on in the market. It was an open call for any investor to ask questions, and I think they responded to many retail investors also. As far as we are concerned, we are taking a position that the fundamental stance is absolutely intact. Technicals, will take its own course.
Fundamental stance is absolutely intact. Manoj, thank you so much for joining in, sharing with us your views on the paint sector and, of course, Kalyan Jewellers, which has been the subject of a lot of chatter over the last 2 to 3 weeks. That was Manoj Menon there of ICICI Securities. By the way, Kalyan Jewellers, as we speak, is recovered from the lows of the day. Slight recovery, of course, 3.5% down still and down almost 45% now from the peak that was close to 800 rupees a piece. Time for a short break, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC TV 18's all-new app. You can get instant access to breaking news, in-depth articles and financial world updates at your fingertips, and you can download the CNBC TV 18 app from the Apple Store or the Google Play Store right away.